this before, but before I go any further, it's a very, very simple statement to make. This is the 10-second elevator pitch. Would you like to drive a brand new car of your choice for £50, $75, or €60 per month, practically for the rest of your life? And would you like to replace that brand new car every 2 years with another brand new car? And the initial response most people would come up with is, it's too good to be true. Well, it's only as good as the numbers, and we are going to explore some of the numbers. Another objection people usually come up with is, this just doesn't sound right. There's something wrong with that. We're going to address some of that also. But before we go any further, I just want to let you know that I am one of those people that has qualified for a car, a brand new car. In about 4 days' time, I'll be handed the keys, and the car has already been taken in possession by the club. So I got a confirmation today from our office director, Maurice Brooks, that the car is in the possession of the club and the handover will take place. So there'll be a few miles on the car, which is absolutely fine. But it is a car that I agreed to. I agreed to the make, the model, the color, the specifications, and all the bits and pieces, that the trim. I didn't actually choose it. I just said, this is the make and model I want. You go with any color. And then they sent me the spec by email, and they said, please, you need to hurry up. If this is the one you want, just say yes. Otherwise, we'll go look for something else. I looked at it. It was perfectly fine for my personal use, and my wife agrees with it. And I replied immediately saying, yes, this is fine. This is absolutely brilliant. It's in fact better than what I was hoping for. So they did really well out of it. The car belongs to the club, not me, but I get to drive it. And there's a logic behind that. I don't want to own the car. It's as simple as that. If I tried to own the car, my expenses would be much higher, but also would be my depreciation. I want to avoid that, right? So how does it really work? Well, if I first give you an example of how I achieved it, if you allow me to please share my screen. In the meantime, guys, there's a chat window. Feel free to chat with each other, ask questions. I'll try and scroll through some of them a little later, and I will try and address your specific questions if the Hangout doesn't already answer some of your basic questions. So I'm just going to share my screen now. And we go straight into the presentation. I hope you can see this. This is for the United Kingdom. Join the driving revolution, and we'll show you how. Our motto is simple: drive a brand new car of your choice for £50 a month, including road tax and comprehensive insurance. This is the specific model that I have qualified for. In fact, it's a slightly higher grade than this. This is the SE business. I've gone for the R line, which is a higher trim and a higher spec. And including extras, it's 35,000 British pound, which is roughly 40,000 US dollars. Part of the VW document that describes the specification was their finance deal. And when I looked at it closely, this is what it is. If you put down 10%, which is already a lot of money, £3,520 is a lot of money already. The rest of it, I would have to effectively borrow over 48 months. And 58% would be spent on paying off the car in monthly installments. And I would still have 32% remaining to be paid as the final payment. If I didn't make any alternative arrangement in the meantime, £11,531 would leave my account by debit at the very last day of that deal. So as you can see, much of it is built on debt and borrowing, which is a big problem. On top of it, I'd be paying about £443 a month, plus extra for insurance, plus I would personally be liable for the road tax and any other expenses that go with it. You could do this in a partnership instead. If you had 4 partners agreeing to put in equal share, each person's share would be about £8,800. It is still a lot, but because you're buying it cash, there is a small chance you might get a cash buyer's discount. But you still suffer all of the depreciation, because that's what cars do. They never stay original price. They always go down in price. And if you have only 4 people, everybody has an equal but very heavy burden to carry, which is £8,800. All we are doing is we just spread out the burden amongst a larger number of people so that their individual contributions are ballpark around 1%, something between 0.8 to 1.23% per person. And what we do is, instead of giving you just a car, we give you a round figure budget of, let's say, 30,000 in this case. And this 30,000 is to include the insurance as well as taxes for 2 years. And we also get a cash buyer's negotiated discount. Not always possible, but in this case it was, because of the day and the time of the year in which we are able to negotiate this. So basically, ultimately, this car worth 35,000, including all the extras, is costing me £50, not $75, £50 a month. And that's as simple as it is. And the way to do it is to crowdfund it, basically. So why do we insist on brand new cars? Because you've got from scratch 2 years of warranty. You don't have anybody's leftovers of a warranty. You get the servicing included when you're buying it new with us. 2 years, every 2 years, the brand new car is replaced. And 2 years of comprehensive insurance is included in the original budget of £30,000. 2 years worth of road tax. Obviously, the insurance has to be estimated, but it still works. And 2 years worth of road tax. And all I have to do is be a 2 years registered keeper of the car, whereas the registered owner will always be the club. I get to drive an average of 15,000 miles a year. So that's 30,000 miles. I'm very happy with that. I don't think I'm likely to hit that target. And there's no MOT in the UK, and I don't suffer any depreciation. I'm just using a car that I'm literally taking from the club because I'm the one that qualified. Now, as you can see, the lion's share of the car cost is in the 30,000 British pound. The lion's share is the value of the car. Small portion for tax, and a slightly bigger portion is set aside for insurance. That's how we do a package deal for the whole insurance plus tax plus car package. This is how you qualify. There are 3 conditions to qualify. I satisfied all 3, and therefore I am in a position to choose the car that I did. So one is a timeline condition, one is a growth condition, and one is a balance condition. Timeline condition is simply you need to be a member for 3 months. That's it. Within those 3 months, whether you build your crowdfunding pool or not, it doesn't matter. 3 months is the sort of honeymoon period within which nobody gets to qualify, including myself. I did not qualify in the first 3 months. So 3 months is the minimum. Give yourself at least 3 months. But it could take much longer. It took me longer than 3 months, obviously. So it could take more than that. The next is the growth. A lot of people are funding the car. They also want their cars funded. So we need to see and experience a continuous growth. And therefore, you need to satisfy the growth condition. And then there is a balance condition, which means, is everybody being served fairly and relatively equally? Are we equitable? So therefore, these are the 3 conditions. It's very straightforward. In my case, I paid $199 in September of last year. In the first 3 months, I wasn't going to qualify anyway. And then I kept paying 50, 50, 50 into the system. And in the meantime, I got to work. I started building my crowdfunding pool. The total maximum annual expenditure anybody's ever going to suffer is 799 British pound. In the US, it's $1,080, I believe. So I think it's in euros, that's the scenario. And in dollars, it's slightly more. But no, bottom line is, £800 isn't really that much of an amount. It's roughly £2 something or the other per day. That's a very low cost of motoring compared to what people end up spending on cars. It's the second biggest expense they have. So I qualified somewhere around February. And soon after, I ordered the car. And on the 1st of April, it'll be handed to me. From the 1st of April in 2018 through to 2019, through to 2020, on the 1st of April, I will be eligible for a replacement car, which is a brand new car all over again, which I'll have to order in order to have it delivered on the right date. So I can simply swap the old one for the new one, and off you go. And throughout this whole period, the maximum expense per 12-month cycle is going to be 799 British pound. And that's a very straightforward calculation right there. So the second condition is the growth condition. Obviously, I have had a lot of people help fund my car. So I return the favor to help fund their car by introducing just 3 new members. It's very straightforward. You want the crowd to fund your car, you need to become part of the crowd, and then you need to help us grow the crowd. And this is how you do it. You just find 3 people, that's all, no more, that's it. But they should be like-minded people, so ultimately your funding pool will grow organically. And if you have a minimum of 20, 20, 20 in each of your 3 pools, you qualify for a £20,000 car, provided you can find total numbers of 81. This is not a matrix in the sense that many people understand it. This is not 3 by 3 by 3 by 3 necessarily. Some people work faster, some people are a little slower. All you have to do is, if one side is a little weaker, just give them a little extra help in making sure they start filling their numbers more quickly. That's all it is. But what really happens here is, if you're balancing 20, 20, 20, that goes to show that everybody and all sides is being served. It's not just one side, one party that is benefiting the most. So this is how you balance the pool, and it's very, very straightforward. You need 81 members for a 20,000 budget. Similarly, you need 125 members for a 30,000 pound budget, which is what I qualified for. I'll be very, very straightforward with you. When I qualified for 81 members, all I had to do is wait a little longer, and automatically they became 125. Why is that? Why is 81 becoming 125? Guess what? There are 81 like-minded people doing something or the other, some slower, some faster, but as they keep doing, since I qualified, I'm counting well over 250 people in my whole pool, but I'm not getting any further benefit. I've already qualified for the car, so I'm out of the equation. I'm still paying in, and now my money every month is paying for one of the next members who are on their way to becoming eligible for the car. So this is how everybody actually, in a round robin type of way, helps each other. So you need 125 members, of which 30, 30, 30 you need in each of the 3 pools. And as soon as you hit 125, you have qualified for a 30,000 car, provided you met the previous conditions also. And once you've qualified, you get to re-enter. So when you re-enter, you become a club ambassador. In this case, I am now a club ambassador. My business card says Prem Johal, club ambassador. Why? Because, well, I have qualified already. So I have a car that belongs to the club. By just driving it for the next 2 years, I'm an automatic living advertisement for the club. Now, I'm just going to give it a break here, guys, because a lot of questions start coming up. What you can do next: upgrade a car or build a monthly income allowance for advertising. It's literally called an advertising allowance. Or you can choose a second car for the same £50 monthly payment. And there's a number of choices. There's a number of details about the company, our CEO and our expansion plans. And there's a whole bunch of other stuff, but I just want to stop here for just a brief moment, stop sharing, and I want to come back on the screen and tell you something. I had the absolute privilege yesterday morning to meet the owner of a prestigious golf club. And the person that introduced us is a member with us, but I don't know where they are. They're in some other pool somewhere else completely. So it took us, it took me a while to get there, but once I got there yesterday morning, after my school run, the gentleman said very clearly, look, I don't get this, right? This is not a sustainable model. This is not going to work. I own a golf club. I own the golf club, and I can tell you these things, what you're doing is not going to work, okay? 45 minutes later, he's requesting the CEO or me to present to all 600 members of his golf club. So what happened in those 45 minutes? What exactly took place there that changed his mind from being, I don't think this is like, 81 and then 81 and then 81. And if you use a calculator, you'll soon run out of population on Earth. And the answer I gave him changed his mind. There is a number, we don't need to discuss it right now. There is a number that we need to reach. When we reach that number of club membership, we close the doors and no further members are necessary. Why? Because in the meantime, there is enough cash flow within the system. Everybody ends up financing everybody else's car every 2 years without needing any more members. So this is not a never-ending story. There is a fixed and finite time when we can close the doors. But do we want to? Do we want to expand to other vehicles, jet skis, motorhomes, motorcycles? Do we want to expand to other motoring related things or not? Or do we want to use some of the budget to have our own label of insurance at some point? These are the questions that are for the members to decide. Okay, but that answer changed everything to the owner of a golf club who said, I don't know what method you're using, but we rely on word of mouth. Guess what? This is a golf club that relies on word of mouth. What does that mean? That is networking. Yeah, somebody goes and plays golf and then they go back and talk to their colleague, I had a brilliant round of golf and they have really good burgers in their cafeteria or in their restaurant or whatever. And the person's like, yeah, maybe I'll come along someday. You know, and they come, they like the club, they like the look of it, and they'll sign up. And this is exactly how life happens in every commercial organization and every type of, even a club. It's word of mouth, and we are nothing other than word of mouth. What I'm doing right now is showcasing what we are all about, so that you can use word of mouth to help yourself be qualified for the same conditions. Another few things people come up with is regulatory, etc. And I'm going to touch on that very, very specifically. I want to deal with the legality, the compliance, and the regulatory side. But before we do that, I'm going to share my screen really quickly once again. I won't go into the old presentation. I'll open up a new one this time. And I would like to show you something else. The objections. This is where most people stumble. Objections. Now, we are a disruptive new idea, so there's a learning curve, and we will deal with that learning curve, but it will never be sustained. Is this, ladies and gentlemen, if you are interested, there are answers, and there are mathematically verifiable answers. There are logically explainable answers. What cannot be done, however, is to, if somebody has made up their mind just looking at it and jump to a conclusion, then it's very hard to convince them. It almost becomes like opposing religious ideologies who've made up their mind and will not budge from their position. It is almost like that. People stand for whatever they dig their heels in whatever they choose to believe. Now, I will go through all of this in a moment, but we are going to start with a bit of logic. And it's very simple. As I mentioned, the example of 4 partners, 25% each. Only one of them can get a car in a year. 25 times 4 is 100, right? So only one car. That means 3 are left out. Is that right? But if they repeat that same process, in the second year, the second person will get a car. In the third year, the third person will get a car. In the fourth year, the fourth person will get a car. And each time, you've used up 100% of the budget. That means the fourth person has paid the full price of the car, but it took them 4 years to receive the car. And that sounds a little unfair, doesn't it? But let's explore a little more. In the 5th year, if they repeat the process, remember, there is still a car available for the first person who ever took the car. It has some value. Even if we assign a 4-year-old car just a value of 20%, now all these members are no longer spending 25% each. They're spending just 20%. Why? Because some of that budget has been lowered. Some of the cushion of cash, that capital from the 4-year-old car has come back into the pool. So each of them is under less pressure now. And you keep repeating this method over and over, there will come a time, by the same logic, where everybody is financing everybody else's car and they no longer have to wait 2, 3, or 4 years. They will be doing it every year they'll be able to renew their cars if they just repeat the process. Now, it sounds too good to be true here, but I want to explain it further. By numbers, it is possible. The numbers make sense. Accountants confirm it. And there's a number of logical reasons why we can tell you. All cars are cash paid, they're loan free. So there is no liability, there's no debt, there is no burden being taken on. It's cash. There's full ownership from the beginning, and this remains a member-to-member system. There must be a catch, right? It looks like a pyramid scheme. Here is the real pyramid scheme. I'm currently insured with Marks and Spencers, and if you look at the terms and conditions, it will tell you the actual underwriter is somebody completely different, BPIP or something like that. And they then are the marketing branch of a larger insurance company, and they then are the underwriters for yet another insurance company. And they tell you, even if you call Marks and Spencers Insurance, they will tell, the first thing they'll tell you is, if there are any claims, this is, our commission is included in this, and that, or that, commission this, commission that. Guess what? It's a multi-level commission system, and that's how all insurance companies work. Okay, at the very top is usually a reinsurer. And lots of people pay in. But what do the lots and lots of people pay in for? They pay in for protection, but they don't actually get any asset. That's why insurance is a regulated industry. But there are always some people who make a claim. So when insurance makes all that money, the whole insurance multi-level structure makes the money, even after they've paid off the shareholders, there is still a large amount of money in a pot, and those who qualify for a claim get their claims addressed. No, provided you qualify, of course. So who should qualify? Well, technically, anyone. It doesn't matter if you're the first customer of the insurance system, or whether you're the 10th or the 100th or the 9,000th customer of that insurance company. It doesn't really matter. As long as you qualify, you get to claim. So it's as simple as that. The qualifier is the one who claims the first hand at taking away the funding towards their car. Now, it is a disruptive idea, right? People will still have doubts even after getting the basic logic that this is still a lot to pay, 20 to 25%, as in the case we've shown earlier, and it'll never work for the masses. Nobody wants to wait a long period of time, and there's always questions and doubts about sustainability. This is how we do it. If you want to reduce the percentage burden, you just have to increase the number of people. Logic is no different. 100% divided by 100 is 1% each. 100% divided by 4 is 25% each. So bigger burden means less people, smaller burden means more people. So we do need more people, and that is what this system is based on, so that everybody's personal expense is low. That's why I'm only paying £50 a month. This will never work for the masses. All these things I'm showing you here, insurance, pension, government, and the banks, they're all effectively crowdfunded, except in case of the government, taxes are mandatory. It's not a voluntary choice. It's not a club you've joined to pay your taxes. You have to pay taxes. Otherwise, you are a tax evader and therefore a criminally liable person. However, you are able to fund a whole bunch of projects because of the tax revenue of the government, which comes from the people. And the people are the taxpayers, and the taxpayer base is essentially the crowd. The same logic applies to pensions. Our pensions are running into trouble right now. Do you know? Do you know that there is a pensions crisis in the country? Why? Because the workforce entering now is not likely to see the same benefits as those who have retired up to recently and who are able to draw their pensions. There's a big black hole in pensions. Why is that? Because crowdfunding in this particular type, those who've drawn out have drawn out while the system was still healthy and had protections. The government removed a certain number of protections, and now pensions are in a precarious position. All insurance is essentially crowdfunded. You have to pay car insurance, otherwise you're an illegal driver. But because everybody pays in insurance and only relatively few people have to make a claim, that system works. So all of them more or less are, this crowdfunding, essentially. Every bit of loan, whether it's a credit card, home loan, or any type of loan you take from a bank, is essentially other people's money. Banks don't have any money of their own, except for the profits that they've been accumulating over a number of years. But if you were to start a brand new bank, where on earth are you going to get the loan from to give to others, except if you take deposits first? So that too is a type of crowdfunding, except we call it differently. That's why I've put crowd in a bracket, because none of these organizations would agree that they are funded by the crowd. Now, nobody wants to wait 2, 3, 4 years. We give you a very simple criteria here. 3 months to qualify. That is 3 months for everybody. Doesn't matter when they join, how they join. The 3 months is the same for absolutely everybody, right? So 3 months to qualify. If you qualify inside, well done. At the end of the 3rd month, you get to choose your car. But if you qualify beyond that, it doesn't matter. The annual amount going out of your account for this club membership is more or less fixed, and it's very, very low. It's £2 something per day, maybe $3 or so per day for American people, and for the Irish friends, something in between 2 and 3 in terms of euros. But it could take you 6 months, 9 months, 12 months even. But even if it took you 12 months, let's say, is it still worth it or not? It certainly is. So if you want a shorter qualifying duration, you simply need more members. And that's how you avoid that example, the previous scenario of 2, 3, and 4 years, etc. How sustainable is it to others? Well, the thing is, if somebody qualifies, that implies that they have met all conditions, including they've been a member long enough, that's 3 months, just 3 months. That means they've personally introduced 3 members minimum. That's all they have to do, minimum 3. And they have met the pool balancing requirement of 30, 30, 30 or 20, 20, 20 plus the rest of the balance in any other leg. So if they've qualified for those conditions, that implies that that pool, that position has raised in and of themselves to pay for a car. So why is it that it wouldn't be sustainable? It wouldn't be sustainable if nobody qualified. If nobody qualified, then everybody else would be paying in for no reason. So, but that's not the case. We have already proven the concept, and I'll give you the numbers in a moment. So this is how it is. Somebody will always be the loser. Everybody, a large number of people will lose out. This is the accusation normally that people come up with. Well, the thing is, some will quit because they don't want to do it for whatever reason, or they can't do it anymore for whatever reason. But some will be slow, but they're still getting there. And others will be really fast at getting their funding done, and they will qualify fast. So all different types of people will have an opportunity to do this, but those who qualify have technically already got the funding ready in the pot, waiting for them. All they have to do is hit the qualifying criteria, hit the targets, and off you go with a brand new car of your choice. The remaining 81 will get nothing. Well, it doesn't work like that. The remaining 81, it doesn't matter which of the member, what member number you are, it doesn't matter. I personally, I'll tell you, I came in, I don't know, beyond number 60, 70 something, So let's say, my example is I'm the 70th member, and I have qualified faster than the 50th member, or the 40th, or the 30th, or the 20th member. I've qualified faster than them. Why? Because I was looking at what is my qualifying criteria. Have I met my qualifying criteria? And as soon as I did, I qualified. So I believe I'm the fastest to qualify, and therefore I am in some ways qualified to explain this to you. Now, if you say, well, 81 times 81, that's 6,561 people paying in monthly. You don't have 6,561 cars, do you? Well, no. Just because 6,561 members exist in the system doesn't mean they've all qualified, have they? Only those who qualify will get the car. But you also know at the same time there are 6,561 people paying in. That means there is sufficient cash flow. So whoever qualifies, if somebody all of a sudden qualifies faster than anybody else ever before, but guess what? The cash flow is there. And everybody along this time is working away to making sure that there is really no funding shortfall. You cannot qualify unless the numbers are satisfied, and if the numbers are satisfied, that implies there is cash flow. It's very simple. This is literally the horse leading the cart, not the cart leading the horse. The horse is the qualification, and the cart behind is the entitlement of getting a car. So this cannot go on forever. This is the main reason why the golf club owner seemed to get convinced very easily when the numbers started to make sense. And this is a very simple scenario. When a number of cars, for example, right now we have 3 cars to be handed over at launch on the 1st of April, that is £90,000 worth of value right there. In 2 years' time, those £90,000 worth of cars might be worth half as much, let's say 45,000. All of a sudden, the club gets a cash injection of 45,000, but in the meantime, if the pools are maintained, there is enough funding for the same 3 members to have a new car at that point 2 years down the line. But in the meantime, there's a £45,000 cash injection in the system. That's what you might call the retired stock, represented here in orange blocks. The rolling stock is with various other members. That's on the road. Collectively, all of this are the assets of the club, shared by all the members. So what is the club really worth? The club is the member cash flow, which is the monthly contributions, plus the annual fee, plus driver cash flow. Remember, even those who are driving are still paying in. They're not driving and forgetting about it. They're not just taking the keys and, not paying anymore. Now they're paying in. So each of the green blocks no longer requires the monthly payment to go towards them. They've already qualified. The orange blocks don't need any money going towards them. So the orange block counts as retired stock. The green blocks count as free money coming back into the pool to pay for the next 4, 8, or 12 people's cars, as shown in this example. So really, the whole thing is an asset plus cash flow model with 0 debt and 0 liability. It is not just sustainable. Any investment banker will tell you we haven't seen such a cash and asset generating model in a very, very long time. This is mind-blowing to anybody from financial services. Anybody. If you know your numbers, if you know basic economics, this is a no-brainer. And I'm an ex-banker, so I can tell you with some certainty that this is an incredible business model. Now, what do I get for my monthly payment? This is where the legality issues need to be addressed straight away. When somebody says it's a pyramid scam, it's a Ponzi, whatever. Listen, Her Majesty's Revenue and Customs are telling us how to separate the monthly payments from the annual membership fee so that the monthly payments can remain free of value-added tax, no VAT. If the government is telling us how to become VAT and tax efficient, and if they are collecting VAT from the UK-based members on the club membership itself, can anyone really turn around and say HMRC is collecting tax from a Ponzi or a pyramid scheme? It's a club, ladies and gentlemen. So what do you get for your monthly payment? Well, many members own different parts of my car, the car that I qualified for. Could it be the fuel cap, the foot pedal? I don't know. Should we dismantle it and return it to the member? Well, it's highly unlikely that you're going to benefit by taking my wing mirror away. What purpose would that serve? And that wouldn't be very nice club behavior either, would it? But ultimately, all the other members have a shared ownership in my car. Now, I have never owned a share in somebody else's car ever before. Now what I'm looking at is a fleet of tens and hundreds and maybe thousands of cars, and I will be a shared owner in everybody else's car, just like every other member. So now all of a sudden you're looking at real shareholder value. But what am I getting for my monthly payment? Well, what am I personally achieving? Well, you're building a car. It's as simple as that. You're building a car. You just don't know which model because you haven't specified the model. You haven't agreed the model. You haven't been sent the specifications yet. Why not? Because, well, have you qualified? If you've qualified, you will be able to request the make, model, and color, trim, and everything for your car. And if we come up, or the admin comes up with the necessary or the right kind of fit for you, they will simply be returning the car, the specification to the dealer, get the car, and there you have your car. All this time you've been building towards it. That's all it is. It's not very difficult. So what we're looking for really are like-minded, somewhat business-minded people, obviously. You do not want people who are just going to join the club and expect everybody else to, do the litter picking around them. It's a members club. We all shared ownership-based membership club. Yes, it requires networking, but it's most certainly not multi-level marketing. This is exactly where a lot of the multi-level marketing people start saying, oh, you don't have a product, this can't be right. No, this is crowdfunding. And I'll go into some more detail there. There is no commission payable to anyone. So there is no cash gifting. That's what makes us highly, highly credible, because we are a club. You're not introducing another friend to the club and getting paid by the club for introducing a friend. You're not doing that. You're introducing the friend because of the sense they see in joining the club, just like the golf club. And this is why the gentleman golf club owner absolutely began falling in love with the business model, because it is similar on the lines of what he does with his club. We want to be regulated, by the way, ladies and gentlemen. We want to be regulated, but no such regulation exists that covers crowdfunding in the way it would be required for this particular business model. So the proof of concept is in place, which is basically the 3 cars. And I'll go into the regulatory side in a moment, but basically we started in August 2017 with just £199. By April 2018, on the 1st of April, 90,000 worth of cars will be handed over, plus there is more cash in the bank to pay for the next qualifying people's cars as soon as they qualify. There is enough money there to pay for the next layer, next levels of cars. The thing is, as soon as people qualify, we will find out, the rest of our membership base will find out who are the ones on their way to qualifying, but the money is already there to pay for their cars. Obviously, they wouldn't have qualified otherwise. But because by the virtue of them qualifying, there's enough money in the bank, set aside and ring fenced according to Her Majesty's Revenue and Custom rules, separate from the annual membership. So when £199 becomes £90,000, ladies and gentlemen, that's 45,000% growth in 7 months. Where can this go going forward? Well, we haven't even launched yet, so the rest is anybody's guess. And this is a simple, easy example. If 81 people have paid for a car, but the car is owned by more than 81 people, because the whole club owns the car, not just the 81 people who paid for it. Everybody owns the car. So the green arrows show you that everybody owns the car, but it actually took 81 people to pay for that specific car. Now, that specific car can only be driven by one person. Who is that one person? That is the qualified member. As soon as somebody qualifies, there's money there to buy their car. So the qualified member gets their car, but at the end of 2 years, they return the asset back to whom? To everybody. So now everybody has a cash-rich club with lots of money in the bank, and cars being bought brand new and returned 2 years later, and still making money by selling 2-year-old cars. So what does the member get? The member gets the privilege to choose the make, model, and color, privilege to drive, and privilege to have their tax and insurance included in the budget, so they don't have to spend extra every month from their own pocket. But most importantly, they get to choose the next brand new car. Why? Because their funding pool is constantly growing. So their numbers, that 20, 20, 20, 30, 30, 30, that is almost permanently satisfied, because the club is just going to grow and grow and grow at the rate of percentage growth we have already demonstrated without even launching publicly. We are only just launching publicly, ladies and gentlemen, on the 1st of April. We have shown 45,000% growth without making any noise on social media for the first 6 to 7 months of our existence. What if I can't? Well, your choices are a loan, a used car, or pay cash. If you are able to do something and work with like-minded people, and therefore like-minded members are always welcome. And remember, it's a voluntary club. Nobody's forcing anybody, right? I personally take exception to when people have accusations that have no basis. If they would like to discuss further, I'm always open. But when people feel free to use social media to say whatever they like, then I tend to engage with them quite proactively. But basically, you have a choice. Crowdfunding is a choice that we make very easily available now with low personal commitment, with very relatively easy qualifying criteria, just 3 direct members who are like-minded and will start to grow in an organic fashion, just as you have. And crowdfunding gives you so many benefits: full warranty, service included, insurance included. Brand new cars are far more economical, so it's good for the environment. You can get to choose the latest of all models, and you're not tied into some credit deal. There's no deposit or balloon payment. You don't suffer any depreciation. I mean, I'm not suffering any of the depreciation because the car is cash paid by the club, and at the end of 2 years, the asset comes back to the club as cash. And it's actually a cash flow saver, because I was spending well over 7 times more than the £50 a month. I was spending about 8 times more, including insurance, per month. So I'm now spending an eighth. What am I going to do with the difference? Probably have more vacations, go on more city breaks into Europe with my family. I'd rather do that than sink my money into an asset. And what if the catch is that I never get to own the car? I don't care. I don't want to own the car. As long as I get to drive a brand new one every 2 years, I really don't want to own the car. So it's releasing a lot of cash. What am I going to do with that cash? Maybe I'll introduce some more family members and open up new positions for them with that. You could do a number of things with money, couldn't you? Thank you very much, ladies and gentlemen. privilegecarclub.com. Official launch 1st of April. We will be launching a cryptocurrency called the PCAR Coin. This is one of the very few asset-backed cryptocurrencies, but the details of this will be released, or the speech about how it all works will be given by Max Garza III of Dragon Tech Team. And he will be at the launch in West Bromwich near Birmingham, UK on the 1st of April. And you get to see him. If you'd like to meet what he thinks this car coin is going to be one of the biggest cryptocurrency launches in the year 2018, because all others are technology based. Their uniqueness is in technology. Our uniqueness is that we are actually low on the technology, but we are high on the cash flow and asset based business. And this suddenly opens up the rest of the world. Even in countries where we can't operate the car club model, people are able to access the value of this business model, this asset-rich, cash flow-rich model, by using the cryptocurrency. And there are lots of people very, very keen and very interested indeed. If you'd like to meet Max, just let us know, and we'll try and arrange a private meeting. He's here for a couple of days, and he would love to meet anyone that really wants to meet him and understand how the crypto is going to work. All right, ladies and gentlemen, thank you very much for watching. I will now touch on the regulatory side, which I believe is important, but I'd like to look you in the YouTube. Yeah, please refresh. You can see me? All right, okay, let's carry on. Thank you, bye. All right, guys, sorry about that. I'm just going to plug my headphones back in and let's get going. Right, the regulatory side. This is very, very important, guys. We made an application to a number of government agencies that do regulatory stuff, right? Financial Conduct Authority, Her Majesty's Revenue and Customs and Excise Department. And initially, all of them said, go away, this has nothing to do with us. Cars are not a security, so it's not a regulatory requirement. Cars are just glorified toys, really, aren't they? So go away, we've got nothing to do with you. But what has happened now is very, very interesting, actually. In order for us to get really good, low-cost insurance, what we need is a bespoke, group-wide, global insurance policy. Now, so that the insurance policy can be written bespoke for us, it's a costly process. So the insurance guys want to make sure that they're going to do, and this is a top, highly prestigious insurance company, they want to now make sure that the regulators are happy with it. So we are actually now in open dialogue with the regulators, and they're very genuine. They're telling us, look, guys, if anything changes, we'll let you know. We'll give you enough time to make whatever little adjustments. But at the moment, carry as you are. Carry on. It's BAU, business as usual. This is fantastic news to come out from a regulator, any regulator, right? So we are based in the United Kingdom, and a number of things you need to know is this. If you go to Companies House, there is the names of the addresses of the directors clearly and transparently visible to everyone. If you go on our website, the same directors are visible and transparent right there with the phone number, and we have a physical office location. Ellesmere Port in Cheshire is our actual head office, where the office director actually sits and takes care of all the paperwork and everything else. Okay, HMRC are telling us how to do the VAT and how to make it efficient, right? And the regulators are telling us, carry on as you are, but we are going to need you to comply with any little rule changes there are, and we will eventually end up regulating you as a brand new concept. But obviously the laws need to be tuned accordingly. So now here's the thing. By law, we cannot touch the monthly memberships for anything other than the car package including insurance and tax and the value of the car. So we can't touch that. So how do we then pay hundreds of thousands of pounds worth of legal fees? How is that money coming from? Are you paying for it? Would you be happy to cough up with the money? So this is where it's a chicken and egg situation a little bit. We can't touch member money for anything other than the purpose. To prove that it is member money used for the right purpose, we are one of the very few companies on the planet that we have a 12-month window by which to submit paperwork to the company's registrar. We're doing it early so that we can record assets with the Companies House website and prove to the rest of the world assets are here. So we are already doing the paperwork to file assets with Companies House to prove that we use members' money exactly like we promised, right? And the 3 cars are being handed. Why else would we organize such a major launch event and book a hall and have people visiting us from USA and Ireland and parts of the UK, people driving down from Scotland even. So now, excuse me, can anybody still question whether it's a valid business model or not when you've got this information now available to you? Really, honestly, when people question, yes, there will be a lot of legal fees required. Why? Because we want to obviously expand. We want to be able to outsource to a professional team of lawyers, outsource any of the other things that are happening, different parts of the world reacting in different ways, public relations, media relations. We are really networkers. We should put our heads down and be doing the networking side. So that's where we really would spend our talent best, rather than trying to understand legal jargon, which is the legal people's job. So we are in negotiations with a number of third parties who are helping us. Now, these are high-profile, prestigious, good quality names, both insurance, the group of lawyers, and the third parties we are dealing with already. We're getting spare parts suppliers offering us discount for member benefits. So whilst you're driving your car for 2 years, if you'd like some little bells and whistles just for your personal car environment, we're getting major companies offering us discounts. We've got to one German and one Japanese manufacturer that want to white label the whole system because the system is so lucrative to them in their eyes, because it is shifting brand new cars. So if you take all of this together, I don't want to reveal things that I'm actually not entitled to share with you, but there are things happening in the background. The leadership is doing the right thing, and they're being honorable every step of the way. This is specifically and especially why it is absolutely, I feel, unacceptable for people to make blind accusations. And this is where, this is why we're going to get the lawyers in anyway to fight off any nonsense that comes up from the public. In the meantime, guys, we've got the tax guys are happy, the regulators are happy. They're saying business as usual. And, if any changes are required, of course, it'll be a pleasure. Just tell us, what do you need us to tweak? Do you want us to have a different type of a bank account? As far as the US is concerned, we've got a payment gateway already established. We've got a bank account with Chase Manhattan, or Chase Banking Group. And, the dollars remain in the US, and the sterling and euros stay in the UK. We've got all these things already in place, and it's such a simple system. You have nothing to sell, guys. All you're doing is showing off your nice little golf club type of environment, and people will see it and look at it and say, yeah, I'd like to join. Yeah. You don't have anything to sell. You don't have a specific car to sell. It's their choice. They just have to qualify. It's a very simple, basic concept. It's so easily duplicatable. It just, this hangout is nearly an hour long now. That's because it needs explanation for the doubts and the concerns and the issues sometimes people have. But I hope that this was useful. I'll try and see if there are any messages in the chat window that I haven't, may have missed out on or not picked up. Sorry, clicked wrong button. Yeah. Do we refresh? First monthly, yes. Hello again. Membership from Sunday is $1.99. Well, allow me to explain this, Jim. It's actually not very difficult. Over 365 days, there's no change. Over 365 days, there's no change in the cost before the launch and after the launch. The reason we are having to do a little adjustment is because of HMRC telling us, and that should be a comforting thing, that the taxman is telling us separate the annual because that may be VAT liable. And, when you start doing business, your tax is not payable until the following year, right? Until the following year's books are being prepared. So why is it, why would they say with the first £200 that ever came in, they wouldn't immediately say, oh no, that you have to pay VAT on that. No, you need to gather momentum. You need to gather volume first. So once the volume is now been gathering, they're coming back to us and saying, actually, you know what, you might be better off separating these two things because the two things have two different functions, let's remember. So in hindsight, perhaps we should have started out like that, but it's okay. Actually, in hindsight, ladies and gentlemen, we should have probably had £100 a month and $150 per month. Then people would have said, oh yeah, that sounds like a good deal. Because if you say £50 a month instead of 100, they normally say, ooh, that's too good to be true, right? You can't win, right? But let me see if there are any other questions. Hello, everyone. Okay, I don't see any other questions other than Jim McCann, and I believe I've tried to answer. Jan has already answered that question. First monthly, 15 days. As a price increase include no, Sarah, there is no price increase. First of all, it's just how we've shifted the payment. So it's not really price increase, to be honest with you. You were first spending $199 in your first payment. You're still spending $199 in your first payment. So there's no difference to you there. What's happening is you were then spending the first 50 a month later. Instead of a month later, you're doing it 15 days later. So you're bringing forward the monthly payment. That's all it is, right? So that's the only difference you bear in mind. So there is really no price increase. The bringing forward 15 days is why? Because 14-day cooling off period is mandatory. So we're okay to refund the VATable annual membership if somebody changes their mind in the first 14-day cooling off period. On the 15th day, we take the membership fee, and then there's no longer any refund. Why? Because the money is paying for somebody's car. You can't pay for somebody's car, be a shared owner in it, and then suddenly say, I want my wing mirror back. That's not going to work, unfortunately. So I hope that answers. Cab drivers, John, yes. So this is what happens. This question is pertinent for our American friends as well as in the United Kingdom. You have your basic comprehensive insurance. Nobody needs to get gap insurance or breakdown cover. That is taken care of by head office as a package deal when we get the group-wide insurance anyway. But comprehensive, gap, and basic breakdown, not basic, breakdown cover, wherever you are, all that is already in. But taxi drivers have something extra on top, which is the public liability insurance. So the public liability insurance is something that is not what other members should have to bear the burden of. So a taxi driver will have to pay for tire replacements by law every maybe 20,000 miles or so, whatever, whenever the tread wears out. They have to get their cars checked more regularly, by the way. They have a different type of MOT system. So they'll be replacing any parts, any wear and tear, whilst on duty. They will be replacing that at own cost, and they will be paying the public liability and taxi driver specific insurance extra. But yes, cab drivers welcome, Uber drivers welcome. It's just that we as members, the asset will have a lower value when they have done 80, 90,000 miles per year and handed back 2 years later. There'll be no juice left in it. We don't mind, because once you got one taxi driver cutting down his monthly cost from £600-700 to just 50, you'll get all the taxi drivers doing exactly the same. And then you'll start having London cabbies saying, what about us? You know, can you do London cabs? Well, probably. Nothing stopping us. So I hope, John, that helps answer your question. But ladies and gentlemen, I think we'll call it a day. It's been an hour, and sorry about the little interruption. I clicked the wrong button. I don't know why. But we are open and friendly to talk to. I personally don't take prisoners when people just start dissing something without understanding. So, you know, I have to take a stance there, because I'm surrounded by such lovely, generous people that are always very kind and polite. And my excuse is that I'm not English. So, U.S. liability insurance included. Ben, no. The U.S. liability insurance for a personal driver is, yes, included. But for a taxi or Uber driver that does public liability or has strangers regularly in their car who are not part of the same household, that portion they will have to pay extra. But yes, Ben, your public liability as a personal household driver is included. So Ben, just so you know, different states obviously have tags and various other fixed known costs. So as long as the cost is known in advance, it's just mathematics, right? So you take the total budget, and if you have this insurance, that insurance, and the other insurance that you must pay, if you know what that amount is, take that amount away from your total budget, and what's left is the car you get. So the more costs, fixed costs you have, and you don't get the money, by the way, nobody gets the money. That money gets paid by the club, so that nobody can do, feel free to do whatever they do with money. So the club pays for all the insurances, but as long as those costs are known, the value of your car will keep remaining flexible. So guys, I hope this was useful. It's called CK and Friends because CK had invited some friends to this hangout. I hope you guys enjoyed this, but please reach out. We are ready to talk on the phone, and we are easily accessible. All right, guys. Thank you very much. And that will all been figured prior to delivery. Yes, indeed. That's really good. Yeah. Well, see, Jill Highland. We are a club based on membership, right? So we are a members club by members for members. Why would we do anything that restricts somebody or the other? So we will always be a little flexible, but there are certain things we can't do. We can't hand over cash to somebody to go buy their own car. That's never going to happen, right? So the club will always be the owner. The payments will go from them, so that everybody is at comfort that the club's assets and membership contribution money is safe. All right. Yes, John, I look forward to seeing the car as well. By the way, just really quickly, US people usually have this question about the Federal Trade Commission, the FTC. Do we have FTC approval? I just want to really touch on that. Read the golf club. Will the club come in as a member, or will it be an individual who joins? No, they want us to present to the core leadership of the club. And then they said, we have a large hall. We can pack all our members in there, and you'll have 600 people in one go listening to you. Because if the owner is convinced, who was very skeptical, then there's nothing stopping us from bringing in 600 people that way, you know. So we're looking at some very, very good number. And this is just one club. And then, guys, you have Rotary Club, you've got Lions Club. You know, start looking up your local chapters, get hold of the chairperson, and start talking to them. You know, it should be fairly straightforward, telling them, you're a club, we're a club, I'd like to have a chat. And if you need, engage me. You know, I'm happy. I mean, those of you that have been working with me, yeah, do that, CK. You know, just go reach out to the owner or whoever is in charge. You know, there's a lot of Terrell is a Rotary Club member. There you go. You know, it's straightforward, guys. They get it. You know, they get it because they're already crowdfunding. What does Rotary do? They crowdfund little projects here and there, depending on whatever is the local chapter's specific agenda, and then what's the guideline given from the bigger global club. Do you do meeting? Yes, absolutely, Naomi. I'm happy. Once I have the car, I have a commitment that I will probably exceed 15,000 miles just for the club's sake, because it's a club's car. So I intend to, by all means, park it in some place where you are supposed to get permission. And when you have the permission, we'll set up a little stall. It's an estate, so I can keep some materials in the back all the time. We'll set up a little stall, and you do your leaflets. You hand out your leaflets. I'll just, you know, be there to talk to people all day long. You know, this is what I do, guys. And it's your car. So why should I drive up to wherever you are? And if I get an invite from Ireland, I'd love to go to Ireland. I've never been to Ireland. I'd love to cross the Irish Sea and take the car over and display it for the benefit of everybody to see. And, you know, I hope get your ribbon. Well, you know, but the car will have my stickers on it for the 2 years, because I'll be obviously driving around in my local area, but the whole country is open. I will obviously have to balance it with family life a little bit, but I'm happy to support individual teams in different regions of the country, and hopefully I'll get to see more of the country that way as well. And all I ask is, you know, take care of my breakfast, and I'm yours for the rest of the day. All right. So, guys, I hope this was useful. And just to touch on the FTC portion really quickly, we've crossed 1 hour. People ask FTC. So, you know, a very simple logical question is this. If you were to set up a poker club with friends anywhere in the US, do you apply for FTC approval? So if you're then sending out messages to people to say, hey, come join our poker club, because it's a special kind of poker club, and you'd like to be a member, you have to pay money to be a member in the poker club. At that point, you don't need FTC approval, but some point in the future, you will need FTC approval. Why? Because you're gathering momentum and there are larger numbers involved. We are dealing with that. We are dealing with that. You know, all these regulatory authorities are not advisory authorities. They take action when they see something. They don't tell you, oh, we look at this business model, we think it's really nice, what you need to do is change here, change there. They don't do that. They don't give you advice. They let you get on with your business, and then it's your job to get regulated eventually. So we are on our way to doing that. That's why we have a global coverage type of team we're looking for from the legal aspect. And the idea of the global insurance is that it should cover the whole world. That is, 197 countries should be covered by one single group-wide policy. That just makes the costs cheaper. That means the quality of your cars can keep going up. But until that's in place, it's going to take some time. And in the meantime, we'll be raising capital using some of the cryptocurrency, which you'll hear about on the 1st. So you said any car of your choice, but I want a brand new Range Rover. That would be more expensive than a Nissan Micra. So do I need more than 3? Okay, so Terrell, you need to start with either a 20 or 30,000 car. So you need to start with a modest car, just as I have. Then you come in as an ambassador. Now you're driving a car. It should be easier to fill your ambassador position. Complete ambassador, go in as ambassador 2, ambassador 3, ambassador 4. You build in more and more pools. Either you take cash as advertising allowance out of each of those pools, or you wait 2 years, and then as many pools as you've built up, they are set aside for you and ring-fenced for you. So when your 2 years are up, you can choose any car of your choice. So our claim is valid. You can drive any car of your choice, provided you have met the funding criteria. So the funding criteria starts small because remember, Terrell, it is for this is for the masses. This is for everybody. This system is not for people who want to do donuts in a Lamborghini all the time necessarily. This is for everybody to genuinely help the average household. Once you have covered that, some people will be more business-minded and they will continue to build. Others will be just satisfied with what they have achieved because they have a relief all of a sudden from the high costs of motoring. So I hope that helps, Terrell. You can grow towards it using a re-entry. Yes, John, that's correct. 2 packages, 38. You can, yes. If you re-enter, can you get a 50-60 car? Yes. Or you can get 2 cars of 20. I'm hoping to do some of that because if my ambassador position, if I qualify again, when I qualify again, it'll give me a budget of 20 and I'm still paying only 50, remember? So I can take that budget of 20 and give a car to a family. So now I'm paying £50 a month for 2 cars, and that's even better. In fact, if you start drawing the advertising allowance as an ambassador later on, you're no longer saying drive any car of your choice for £50 a month. Now you're saying get paid $950 to drive a brand new car. Changes everything. So I hope this was useful, guys. No credit checks, yes. And no credit checks, no loans, no deposit, no nothing. Membership cost, yes. It is manageable for most driving households, yes. And yes, some effort is required. It's not that you just sit back and somehow magically a car will appear. That's not going to happen. There are conditions to satisfy. It is subject to those conditions that you qualify. All right, guys, thank you very much for your time. I think I've tried to answer all of the questions, and we'll be doing more of these anyway, but hope to see many of you on Sunday at the launch. I hope there'll be some live streaming because I just want to sit back and enjoy the event. All right, guys, thank you very much. Don't know where to switch it off now. There we go. All right, thank you very much, guys. Bye-bye.